Thank you for joining us at XM.com for the weekly outlook. We'll be having a look at the upcoming week. It's jam-packed, of course, with data. It's going to keep investors guessing by how much central banks will tighten this year. I'm Cristina Marujos. Joining me today is lead investment analyst Rafi Boyadjian. Rafi, let's start by having a look at China. We're expecting a barrage of data for April while the draconian lockdowns were imposed. Hence, markets are looking at a slowdown. But how could this affect risk appetite globally?
Well, Christina, those lockdowns are a real concern because the Chinese government is not giving up on its zero COVID strategy. So, of course, in order to achieve zero infections, you need really tight restrictions. And given that this time around, the latest outbreak has affected Beijing and Shanghai, China's two biggest cities, there's a real concern that the Chinese economy is headed for quite a steep slowdown. So we might get some insight as to how much the economic activity is being weighed down by these lockdowns when we've got the industrial output and retail sales numbers coming up next week. We already saw a big drop in retail sales in March and an even bigger drop for April would raise major concerns and would affect related currencies such as the Australian dollar because it would affect exports to China from Australia.
Well, of course, speaking of the Aussie, it could take a hit from a potential slowdown in China, but Australia's April jobs report and the upcoming federal election on the 21st might also be key events. Therefore, how could the Aussie perform this week?
Well, the elections could turn out to be a non-event because there's really not a lot of difference between the economic policies between the current ruling coalition and the Labour Party. And in fact, a bigger concern is not so much who would win, but if we end up with a hung parliament. On the whole, though, the Aussie will probably not be too much affected from politics. But it could move on. We've got wage numbers coming up and the employment report as well. So if the data points to a tightening labor market, that could signal that the RBA could opt for maybe a steeper rate hike at its June meeting. Last time it raised by 25 basis points. Maybe it might choose to raise by 50 basis points next time.
Now turning to the United Kingdom, employment, inflation, and retail sales are coming up this week. How could the data, though, shape expectations for the next moves by the Bank of England, and what should we expect for the pound?
Well, the Bank of England has already warned about a recession in the UK. Now, the pound perhaps could move on the inflation data because it is expected to shoot up in April because that's when a lot of the energy bills in the UK were allowed to be raised by the energy providers there. Inflation could in fact surpass 9% in April. The labour market will probably stay relatively robust for now, but consumption is already the sign that consumption is being affected by the consumer squeeze on consumers by higher inflation. So the retail sales data on Friday could hurt the pound if it's bad. On the whole, though, I think investors have already priced in maybe a shallow rate hike path for the UK than other countries. So that's likely to weigh on sterling for the time being.
Inflation, of course, will also be eyed in Canada and Japan this week. Could a strong print solidify a 50 basis point rate hike by the Bank of Canada, you think?
That is certainly possible. Inflation in Canada is expected to have risen even further in April. Japan will be interesting too because the core CPI rate there could reach 2%. But Bank of Japan, of course, has shown no indication that it's willing to tighten policy anytime soon. So risk sentiment could in fact be a bigger driver for both currencies. Of course, in the opposite direction, the loonie would benefit from improved risk sentiment, whereas the yen, which actually managed to restore its safe haven status in the past week, it actually gained on the back of those heightened recession fears, could fall back if risk appetite does improve in the coming week.
And finally, speaking of safe havens, let's also have a look at the US dollar, which admittedly is the name of the FX game lately. Given it has reached new highs recently, is there any more room for further gains this week, especially if the retail sales report on Tuesday comes in solid?
Well, we do have quite a bit of data coming up, but the retail sales that you mentioned, that will be the highlight. So forecasts are suggesting that US consumers remain fairly confident in April. Analysts are predicting 0.7% month-on-month gain. If that turns out to be the case, then that would basically reinforce expectation that the US economy will probably be resilient throughout this period of the geopolitical turmoil and high inflation. But overall, in terms of the direction for the dollar, we could see some consolidation because we're probably not going to get any major developments. I think we've had clear signs from the Fed in terms of what they intend to do for the next 2 meetings. So that's obviously markets have clarity on that. What comes after that is of bigger interest, but we've got some way to go until we get to hear more from Fed policymakers in terms of what they're going to do after July, whether they're going to keep raising by 50 basis points or even higher.
Rafi, thank you so much for joining me today. This was the Weekly Outlook here at XM.com.